Hi there. This is a short video just explaining a situation whereby people lose with martingale because they don't understand how break of structure works. Now, this is a 1 minute chart on volatility 25, and if you observe carefully, you will see that on the 1 minute chart we had a trend from around here down to this place. So now the normal thing on the 1 minute chart, as I trade it according to the trend. So from here down to this place, we had a trend. So if you watch the 1 minute chart, the way it played out from here, you'll see it came down, went up, came down, went up, came down, went up a little bit, came down, went up, came down, and pulled back. Now, when it came down, made a new low, the idea usually is always that when it makes a new low, that's your opportunity to sell. So when it came down, went up here, came down, usually, I recommend you should have done this at least twice before you start taking advantage. So it came down, went up. So let's say from here, the opportunity began to become clearer. So let's say in this situation here, after making a new low, if you didn't want to take this after it turned back and sold on this for sale, you'd have made profit here. Let's say you waited for this. Okay, it made a new low, then turned back and bought. Okay, so if you were using martingale, you would have had to do 1, 2, and this would have worked for you. A third would have worked for you. So the same way too, it came down again here and bought. If you're using martingale, you'd have had to do 1, 2, the third would have worked for you around here. But guess what? You need to observe here. Remember, the idea is that it doesn't break structure. If you notice, after this, even though this would have worked, and this was the one I actually traded, you notice it turned around, went up, and broke structure just around here. So at this point, we can't really say it's still making new lows. However, after breaking the structure here, it turned around and went all the way down and made a new low. Now, this is the trick point. This is where people usually lose money. Someone just looking at this, not taking notes that this thing actually broke structure here. And not waiting. Remember, I always say wait until, when it breaks structure, wait until you see a clear new trend before you enter into the market again. After breaking, it just came down. There was no clear new trend here per se. Now we could say that it made a clear new trend here. So it made a new low quite alright. But now, if one had tried to enter in when, let's say, it turned back here, you'd have most likely lost because it took quite a lot. Let's say after the first reversal, you entered in, it didn't work. It didn't work. It didn't work. It didn't work. It finally worked around here, but that most people would have, that's about 4 times. 4 times martingale, you'd have a lot of money would have, depending on your initial stake, a lot of money would have already been on the table. Okay. So this is, you always take notes, at the microscopic level of what's going on. The trend may still be generally down at a higher trend, but if it breaks structure at the time frame you are trading, you need to watch out for that and immediately stop your trading. So I just felt I should quickly share that with us. So thanks for watching, and see you in the next video. Bye.